Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Chris shares his winding path from the University of Miami all the way to his current role as an investment analyst at Titan, a fast-growing FinTech firm. We cover a lot in this episode, including his role in the back office at a bulge bracket investment bank, why he was trying to get out before his role even started, how he transitioned to a boutique investment bank on the West Coast, what he did when that blew up, how he was duped into taking a CorpFin position that promised the world, his amazing experience working at a family office, his quarter-life crisis, and finally, his new investment analyst role at Titan. Buckle up and enjoy. All right, Chris, thanks so much for joining the Wall Street Oasis podcast.
Patrick, thank you so much for having me. It's great to be here.
It would be awesome if you could just start by giving the listeners a quick summary of your bio.
Sure. So I went to undergrad at the University of Miami, double major in finance and econ, graduated in 2013. And after having a role as a financial analyst, I was an investment banking analyst for a boutique oil and gas focused company. This was, back in 2013, 2014. And so once oil cratered, deal flow dried up, and I moved over and did more on the corporate finance side, helped a dual track IPO sale process. And then for about 3 years after that, I worked for a family office. So really cut my teeth on the valuation side and real business and company analysis. And after 3 years, I had my quarter life crisis and realized I wasn't doing what I loved and what I wanted to do, which was work in the public markets. And so couple different jumps and crazy things that I did finally got me here to work at Titan, where I'm an investment analyst now.
Very cool path. So let's start all the way back at undergrad real quick. We'll take you down memory lane. You Miami, fun school, right?
Yep.
It was an amazing time. Tell me a little bit about just the program. Were you thinking finance right away? Because, I know you went to a bulge bracket and you're a financial analyst. Was that tell me about the role you got coming out of there? Did you ever think front office and then or were you thinking hey, it's going to be tough coming out, it's not a target school, right?
Right.
So tell me a little bit about that thought process, what you knew kind of in undergrad and what you knew kind of approaching junior year and senior year and stuff.
Yeah, definitely. So I actually went down to Miami to play baseball. And so I wanted to be a sports agent. So I started off, my first year, business law and I don't know, maybe psychology, something like that. But it was my freshman year internship where I first got really introduced to the stock market and just fell in love, really replaced baseball as my passion. And so that's what made me change my major to a double major in finance and econ. I knew, basically starting on my junior year that it was going to be very difficult because I wasn't at that target school. Luckily, or, through a lot of hard work, I had very good grades, I was at basically the top of my class. And so the only real banking program that I recruited at Miami at the time was Citi's Treasury and Trade Solutions. Mm-hmm. So, working capital analytics and products. That's what I ended up doing my first year out of college. And so the recruiting process there was a very, very typical to your investment banking bulge bracket process where, you'd have your junior year internship. Most of those people will get, the full-time offers for, upon graduation. Exactly what I did. In my entire, I wouldn't admit at the time, but my entire goal was to get my foot in the door there and then transfer over to the investment bank.
I wonder how much of a problem that is nowadays where kids are yeah, I don't mind working middle office or back office. And they're their whole goal is front office and they're just leveraging the entire or networking the entire time.
I'm not sure how many people are actually okay with just being in the back office. It definitely wasn't my goal, right?
Yeah.
And so, the entire time I was really kind of thinking about making that move over. And I got very fortunate to have found this, the boutique investment bank that I mentioned while I was at Citi. And
let's talk about that a little bit. Let's talk about that first year because
yeah,
Treasury and Trade Solutions. Can you explain what you're doing for, I assume you're working with sales and trading, the desk there to help do what? Working capital analytics. Just explain day to day what you were doing. Was it really tough at first? Did you feel within a few months it was easy, or within a few weeks it was easy? What was it like?
Definitely the latter. It definitely was not
You're like, that's
challenging.
it? That's it?
Yeah,
A week?
exactly. I'm in undergrad, taking, financial modeling classes. And then here I am, I'm doing modeling and pricing models and whatnot, but nowhere near the level of analytical rigor that I was expecting. And so that was a big part of what really, kicked me into high gear to want to find that, next role, which was that I just was not being challenged, wasn't learning fast enough, wasn't really in that high stress environment, high activity environment that I was looking for. And so, what I was doing was just putting 100% of my effort into the job during the day. And then my entire nighttime, I'd wake up at 5 a.m., work out in the morning, go to work, get out of work around 6:30. And then 6:30 to 9, it was just recruiting and prep, recruiting and prep. The number of phone calls and cold emails, I mean, they're numbering the hundreds, probably into the thousands, and I
Let's talk
think,
about that. I think because I love breaking down that like after hours thing. So, you're working probably 40 to 50-ish hour weeks at the day
yeah,
job, not too bad.
yep.
Um, you kind of get out, you get home, and you have to have energy to like, so what are you leveraging at this point? I assume LinkedIn was big enough where you're probably all over LinkedIn, or no, not quite.
LinkedIn was fine. It
Like
was,
where were you finding these contacts, even just cold email, and like what was your funnel? What did it look like? I know you
it
said several
was,
thousand or something at the top, but then how did it, from where? Like where were you getting these contacts?
yeah, no, LinkedIn was definitely one of those sources, if you will. A lot of it was talking to friends that were in the business and in the industry and just trying to get connected to more and more people. That was definitely a big part of it. I'm trying to think back. I'm sure that Wall Street Oasis was definitely, in there, but it wasn't, I didn't have Twitter, right? I didn't have, Facebook was, you have your friend groups, but you're not using it for recruiting, right?
Right.
And so a lot of it, I feel like, was just, if I remember correctly, it's my bootstrapping and just trying to talk to people and more friends. And then for every conversation, it would usually lead to at least another one or two people I could talk to. And so it was very much just rolling up my sleeves, doing it the hard way. I would say that I definitely worked harder, not smarter, when it came to my recruiting process there.
So like you knew you wanted to get an investment banking analyst. So you're like, I'm just gonna do what I need to do. Do you mind sharing like, you said a couple weeks in, you're like, wow, that's it. Once you're in the kind of back office, you're like, okay, I have to just hit these numbers, do these models, and that's basically all I do over and over and over again in the back office. And that's what we hear on the forums as well. It's like it gets pretty repetitive.
Yeah,
You can move up if you're willing to kind of put your head down and get paid decent wage and all that stuff, but it's kind of capped, right? So
exactly.
for people who are motivated, it's I think a lot of them try to find their way out. So you're getting home, you're doing this stuff. How, I guess, what do you target? You're just targeting anybody in investment banking. Do you know investment banking is what you want? Are you talking to people in like FP&A, anything like that?
Definitely not FP&A. So my entire goal, right, was I wanted to be at a hedge fund eventually.
Okay.
And so I kind of just starting at that end point, work my way backwards. And so the most logical place to start would be investment banking.
Yeah.
Never want to do FP&A. It was always that one track mind if I want to be in the public markets. And so if you're not, I think having that connection out of school to get to the buy side, I think that investment banking is the right place to start. And I was right, along those lines where it's you're developing that core, very fundamental analytical process and skill set where you're just learning how to very basically model at a company, right? And everyone that's been, in investment banking knows that it's not rocket science, what we do, right?
Yeah.
And so, no, it was very much like that very focus of get me into banking. I don't care where it is. I want to make sure that I develop the right skill set. Like I'll move anywhere you want, evidenced by what eventually happened, right? I'll do anything it takes just to get into the business, get my foot in the door. And from there, I know I'll accelerate.
Okay. So be honest, how many months into your job at Citi did you start networking right away?
It started before I started. Yeah, no, it
You
was,
did? Okay.
this was a constant, even, I
So
would
like your
say,
junior year, so when you did your junior year summer there and you got the offer, you accepted, but like you were still trying to get more investment banking interviews, front office interviews, because
I
you
would
kind of
say,
knew already.
yeah, I wasn't as active my senior year. I had a lot of stuff going on, some certain responsibilities I had to take care of.
Yeah.
But as soon as that kind of died down at the very end of senior year, yeah, no, I was right back to networking and recruiting and
Okay.
definitely wouldn't say that, but it was it was almost an impossible task, right? Because the first question is, well, hold on, you haven't even started your job yet. Like, what are you talking about? So
Yeah.
there's kind of like a blackout period, if you will. But I'm that kind of person where if I know what I want to get to, I'm just going to head down and just go after it.
So at what point did people start kind of hearing you out a little bit more? Did you feel like there was a turning point, like after 6 months or something like that?
It's funny you say it was definitely after about the 6 month mark, because I remember it was the start of the new year. After the start of the new year, my first year out is when I started getting a little bit more traction, a little bit more understanding of where I was at. Because at the same time, I could explain like, listen, this is my day to day. This is what I'm doing right now,
Mm-hmm.
and it's not what I want to do.
Right. And so tell me a little bit about, so you said, maybe 1,000 or so contacts, like how many of those turned into like phone calls?
Oh, very few. Oh, it was
100
yeah.
total or 20 or what?
Yeah, no, I would say in the hundred. I'd say in the hundred, and so the phone calls and the actual networking, uh, I would say probably about, if let's say I did 1,000, right? Cold emails and all that. I
Right.
would say it was about like 20% maybe total conversion to either a phone call or at least a response, right?
Okay.
And then so narrowing that funnel down, I would say I got to, let's say, 15 interviews or so, maybe
Okay.
15 or 20 interviews, ranging
When did
from
those start? Like when was the first one that you hit, like first round interview?
first one that I hit was probably in February or March. This was a while ago. Yeah, I would say
So 7 months
May.
in or so.
Yeah, yeah. And I remember one explicitly. I was in Vegas for March Madness with my buddies, and I took an interview with Houlihan Loki while I was in Vegas. Yep, for their tech group. The interview didn't go well, but
I think we
but
can all
that's
assume, we all know why that's the case, but
exactly. So that's it. I really started getting that traction there. And yeah, I had about 15, 20 interviews, a couple different offers. But the one that I finally landed on was, at the time, it was the right one for me because I was fascinated with the energy space.
yeah.
And so I was, all else equal, the fact that I got that opportunity with the energy related IB was exactly what I wanted.
Yeah, small bank, but West Coast, it was a
Yep.
big move. But so tell me a little bit about like that whole interview process. Like from the first rounds, did you make to a few super days or like out of the 15 first rounds, like one super day?
It was just one. Yeah,
Just
just
one.
one. Yeah.
Okay, so you been striking out at some of the other ones, like so the Houlihan one, you're in Vegas, I get it. What about the other one?
Oh, in general.
Yeah, in
Yeah,
general.
no, yeah, no, it's just one. So Houlihan didn't make it. I made it to, I would think, was the round right before Super Days for a couple of them.
Yeah.
But I would say the majority were thanks but no thanks. And it's that lateral transfer process is very difficult.
Why do you think that is? It wasn't quite hot enough. Things weren't. I know now people are just dying for any bodies. Like,
Right, right.
so like
Yeah.
that back then it wasn't as crazy. Do you think that's maybe why, or was there something else like with your prep? Do you feel like you were ready? You were fully ready by that
No,
point?
I think it was a combination of two things. One is it was your first point. It's both your points. The second one is I don't feel like I did the requisite work to really be ready. I went through the primers, or I forget what they're called, basically the whole technical questions that you could be asked. I went through all those, but this is the reality. Unless you're doing this on a day-to-day basis and you're really in it, you're really just memorizing answers. You can't really walk your way through, how does certain accounting line items flow through the three statements, as an example.
Yeah.
You don't know how to build, accretion and dilution models. You just don't know that unless you're doing it all the time. And so
You gotta take our elite modeling course, man, and
that's
our
exactly
IB
right.
interview course. I'm plugging it right now. No,
That's
no,
exactly,
it can
yeah.
get you
If I
closer,
can
but you're right.
rewind.
It can get you
Yeah.
closer, but you're right. It's one thing to be doing it, and then it's like, oh, this is easy. It's
Yeah.
another thing to be asked technical question after technical question, and in a high pressure stakes.
Like, now put me in an interview and I'll pass with flying colors,
Yeah,
right? But back then, it's so funny. You don't realize how little you know.
yeah,
And
that's the
so,
key. That people think
yeah,
they're doing really well, or even on the behavioral. They'll spend all their time prepping for the technical, and they're like, "I got it. I got to know exactly all these different valuation methodologies." And they're like, "Why you want to be in investment banking?" And the person's like, "Oh, I like that it's a high pressure situation. I learn a lot." Da, da, da. And people are like, "Come on, man."
All the very standard answers,
all the
exactly.
standard answers, and it's just not genuine. Doesn't, and like they don't realize like having a good genuine answer to that is so much more important than like getting every single technical right and being like,
Yep.
you know what I mean?
Yeah, and even for me now too, I got to hire my last job when I was at the family office, and in other kind of recruiting roles, I've had exposure there and seen it. The one thing that I would look for really isn't technical. Anyone can learn it. To my point, like once you're on the job, it comes down to hunger, I think. And if you can find someone that's truly hungry and will work harder than everyone else, that's what you have to look for. And those standard answers that you get out of even the qualitative section of these primers, it's not going to do it for you. You want to be able to stick out in someone's mind. And so these are all lessons that I wish I knew back then, but it's good to eventually learn them.
Yeah, no, for sure. It's tough. So eventually you got an offer. Was it a big pay raise or similar? I mean, you're going from like back office to front office, but you're going from like mega huge company to like tiny company.
Yeah.
So was the base pretty similar, like 70, 80, something like that, or 70?
Yeah. So the base was a little bit lower,
Yeah.
but in terms of the comp, it was 100% of base, right? Instead of versus, the back
So
office, you're like,
almost doubling
yeah,
your comp.
exactly. And so, the comp was nice, but, and helpful and exciting, but really it came down to finally being in the industry, and after all those hours, it's a pretty rewarding thing.
And so speaking of hours, when you did join, first off, was it tough saying goodbye to your back office job? Not the actual saying goodbye to the job, but just like the people, were they upset when you said I'm leaving after a year? I know you were probably happy to leave, but just tell me.
I got a few choice responses from, especially the people on like the HR side that did all the recruiting and whatnot.
Yeah.
But I would also say that I doubt that it caught many people by surprise.
Okay.
I'm sure the writing was on the wall there.
Yeah. So were you? Did you have any break between starting, or like did you move right out to the West Coast and boom immediately?
Oh, I'm not someone that can take a break. I went right out and I just started going. Yep.
Okay. And so what were the hours like at this boutique bank?
Wow. A lot. That's what I can remember was
like 80, like over 80.
Oh yeah, no, I would say so.
Yeah. So you were getting worked pretty hard. One of the risks of joining a small boutique bank, it can be huge fluctuations in deal flow. Sometimes you're pitching all the time, and then other times you're drowning in live deals. What was it the case for you guys? I mean, June 2014, you're in an oil and gas type boutique. What happened?
Yeah. So when I first started, our backlog of deal flow was insane. I was cranking out just models and just decks all the time. I would say probably around the 6-month mark after that is when things started dying down on the deal flow side and we started pitching more.
Mm-hmm.
And you just saw this cadence of pitches really pick up around then.
Mm-hmm.
But the cadence of actual execution of pitching and getting the deal and the number of pitches in general really started dying down. And it was, I would say, a pretty direct correlation between that and the oil price.
Yeah.
Because, when I joined, oil was essentially at its peak. And about 9 months in, whenever it was, oil was down to about $30 a barrel. I forget whatever it was.
Yeah.
Crazy. And so everyone freaked out. All deal flow stopped. And that's what kind of led to me eventually, moving over to the third role that I talked about.
Yeah. So tell me a little bit about like MD pulling you out or partner pulling you office saying, hey, there's not a lot of deal flow here. You're going to find another job. Were you okay with that? Like, did they give you enough time to find something, or what was
it? It was more of like, we're not kicking you out, but if you want to find something, then like, we understand. Right.
Yeah.
So, there was plenty of time, and, when it eventually happened, what I'll say this too, another mistake that I think I made is not waiting for the right thing. I think that maybe I was feeling the stress of the broader market, what was happening there. Yeah. I didn't wait till the right role that I wanted to find, but the role that I did find was somewhat aligned with what I wanted to do. So I just made the jump right away. But yeah, they were perfectly fine with it. They were great guys. So I was very fortunate there.
That's awesome. Yeah. And so you're going to a corporate finance role, given that you want to be a hedge fund eventually, or like, in the investment space, why not go to another bank?
Yeah, detracted there, right? That was the pressure part of it.
Yeah.
I was definitely worried about being able to make that jump, because once again, like, this was something that I dealt with a few times, is like, listen, I'm just out of college. I don't want to get that, reputation of jumping around.
Yeah.
And while this was a little bit more circumstantial,
Yeah. It still looks bad on your
it
resume.
still looks exactly right.
Yeah, because you
And
had
so,
left after 1 year. You were hoping to at least do a couple of years probably at this
yep,
peak,
I
and
want to do at
suddenly,
least two.
and then suddenly it's less than a year. You're at another place, and you're stuck.
Yeah. Yep. Exactly right. And so at the second place, my story is almost.
Tell the listeners a little bit like, what was it? A manager of corporate finance, but like, what does that mean? Like, what were you doing day to day? That seems very different from banking.
My story is almost too crazy to be believable. So I joined this oil and gas investment bank in June 2014 at peak oil.
Yep.
And oil just goes from there down to $30,
yep.
right? So then I join a good situation, leave a bad one. I then joined this other apparently great situation. So the situation I joined, and I'll leave the company name out of it, but the plan was it was owned by two private equity firms, two major private equity firms, and they were looking for an exit. And this is why I joined it. I actually had a buddy pull me in who was actually at Jefferies, went over there. And him and I were going to be the two guys leading either a dual track IPO or, a strategic sale off to another company, whether it be an actual strategic or another sponsor. And so that's why I joined. I was going to get some great like actual IPO or just M&A experience.
Yeah.
And so that's why it wasn't along the public market side, but I'm like, okay, like this will work, right? Well, it'll go great with what I've been learning in banking. It'll be kind of a good addition to my resume.
You were tricked.
I think everybody was tricked. I joined, and I can remember the dates exactly. March 30th, 2015. I joined. That day, they had released their February earnings. The company went from a $2 million EBITDA run rate company on a monthly basis to a $2 million loss in the previous month. Yep, that Thursday, the CFO got fired, and it kickstarted an entire restructuring. So instead of leading this, growth story, I was leading a restructuring, which, you look back on events, and at the time I was pissed, I was miserable. But you look back on it, what I tell people is, when things are good, and you can relate it to the recent stock market. When things are good, you can get very lazy. You can get away with bad habits and still do very well. Yeah. But when things are hitting the fan, that's when you really have to be buttoned up and you have to learn and you have to know what you're talking about. And so that's what it really forced me to do. And so in my role,
like you just joined there. Why not just try to lateral to another bank and just explain the situation? Be like, look, I started at this place. We were supposed to go do this. I still want to stay in banking. I thought I was going to get this type of experience. Like, isn't that a believable story? Or you felt like, oh man, this is just gonna.
Yeah, I didn't think it was even a possibility. I didn't even try. I didn't even think about it. Yeah. And maybe that was the wrong decision,
Because the way I see about it, like you probably had like at least a 2 or 3 month window there where you could join another bank and then, maybe put an extra month on your LinkedIn on each side, right. Like get away with it. You know what I mean?
Yeah, I didn't even think about it because what was in my head was like 3 jobs, 1 year.
I'm stuck.
Like
right.
9 months,
I would have been like, shit, I got to get out and find that third job. This never happened. Like, this job never happened.
Right. Just like quit and leave. Right.
Yeah, quickly. Well, yeah, you don't want to quit without the other thing lined up. So
exactly. So I was in a very impossible situation, if you will. But I'll say that, it worked out for the better, right? So I got to work directly with the executive team, the CEO and the COO every day, along with the board. Yeah. So got to be around some of the smartest people I've worked with, every day for about 1.5 years. And learning so what the restructuring did is it made me really understand how a company operates inside and out. I mean, I saw the actual guts, infrastructure, everything. Yeah. And so while it wasn't why I joined, what I wanted to do, long run, it was so immensely beneficial for me in my understanding of how companies operate. Yeah. And so, did that for about 1.5 years. And it was all centered around, one is creating a restructuring plan. And then 2, a lot of my time I spent modeling it all out. And the modeling side, I mean, the level of detail that I went into, we're talking about thousands and thousands of line operating models with, FTI level.
Oh my gosh.
I mean, I did
product level SKUs and everything, and like crazy.
Product level SKUs. I was at FTE level, like people buy role, everything. Yeah. And so the level of modeling experience I got, the actual, experience of understanding
That's
how
crazy for a
companies
company for only
function.
2 million EBITDA run rate month. Oh, I guess monthly run rate. It's pretty good. Yeah.
Monthly, yeah. Yeah, no,
For a
they were
second, I
at
was
a
like,
point.
annual run rate. Why are you going that crazy? Like,
Yeah, no. These guys were, I think when I joined, it was like about a $350 million valuation. So not big, not huge,
yeah.
but sizable.
Yeah. Okay. So you're there for a year and a half. When are you kind of starting to look for your next move, and what are you thinking in terms of, okay, should I go back to banking? What should I do? And it looks like you wanted to get back to the East Coast.
Yeah. Yeah, definitely want to get back to the East Coast.
Any reason for that? And like, when did you start looking? Like once the restructuring plan was done, or what happened?
Yep. So it was once the restructuring plan was done, which so between the time I started looking and I actually got the job, it was quick. I mean, it may have been a month, maybe two.
Okay.
So I didn't spend a lot of time afterwards looking. The reason why I wanted to get back to the East Coast was twofold. One is my family's back there.
Uh-huh.
And then two, it's, I always wanted to be in New York. And as great as LA was, it did not align with my personality at all. And yeah, I wanted to be able to experience that really fast paced New York lifestyle. And so that kind of was the genesis of me looking back East.
Okay. And tell me about your interviews. What types of firms were you interviewing with? What did they like in your background? What were what were the tough questions?
Yeah, it was mostly PE. And so this is, I think, where I maybe didn't think about the long-term goal again. And it was more thinking about what my experience aligns with, which was more on the PE side.
Yeah.
And so, yeah, it was all family offices and private equity firms that I was talking to, a few different opportunities there. But I was pushed, and the reason why this happened so quickly is I was really pushed towards this family office I ended up joining.
Mm-hmm.
I had a friend that essentially knew the partner, and the way that it was described to me was, if you truly want to be able to value and understand a business better than anybody, you go work with those guys. And so for me, I've always thought about being, my younger age, learning was more important than the monetary upside, because the latter would come.
Yeah.
If you learn the ropes fast enough. And so I got connected to that company. And after going through, God, a couple rounds of interviews with them, they flew me out and really just dug into my experience at the firm that I was already at, because it was healthcare related. It was very deep operating model work that I was doing. And so that's what pushed me over the top, was my level of experience with really understanding companies and modeling them out to the level of granularity that I did.
And so they love that. But what made you comfortable with them? Why not go to another family office or another, well, I guess PE might have been a stretch at that point, right? But
yeah,
why not another family office, for example?
Yeah, the reason for them was, one, I really trusted that friend that I knew,
Yeah.
who had actually.
I felt like your other friends sailed you down the
Yeah,
river. They're like,
yeah, they did. I need to find new friends. That's the problem. But he had interned there.
Okay.
And so he knew exactly how they operated. He was in banking. He was in private equity at the time.
Yeah.
And so he was like, listen, the way that these guys go about analyzing companies versus the way we do, it's night and day. Like they're better.
Yeah.
So like that's what gave me the comfort. And the company itself had grown pretty dramatically over. I would think when I joined, it was 20. Oh, it was about a three years. They had grown really dramatically.
How many investment professionals were there? Or
the core team was 7, and then you had the partner, and you had a whole support staff and everything.
Do you have are you allowed to say how much money you guys were managing, or was it blank check, whatever you guys could spend, basically?
It wasn't a blank check, but it was probably as close as you can get to it.
Several billion or something. Yeah.
It was sizable.
What types? So your work was specifically, it looks like you were doing portfolio management, but you were also looking at new potential deals. Was it all equity, LBOs, debt side? What was it? What types of deals?
It was more on the LBO side.
Okay.
And so it was, I say LBOs because they were highly levered deals, but they were highly levered because we were able to put mortgages on the deals instead of, so we were buying both the operating and the property, entities of these buildings. So yeah, we had a core portfolio of, when I joined, I think it was around 30 or so assets.
Wow.
And by the time that I left, we were pressing against 60. So the
You were
company
busy.
was still, oh, we were very busy. And so if you think about the two different functions as well, the portfolio management side's more on the monthly updates, but given where and the whole strategy around the acquisitions, a big part of it was really turning around operations. And then when you layer on the complexity of healthcare, that just makes it that much more difficult. And then also the regulatory environment.
So
And
were
so
you guys buying distressed stuff here?
not necessarily distressed, some of them were.
Some of them were. Okay. So because you mentioned turnaround. So like some of it was distress, opportunistic, buying the underlying real estate allows you not to put the business out of business.
Yep. Yeah, exactly. Because you're paying rent to yourself.
Right. Exactly.
It's from one pocket to the other. When I say turning around too, it's some were distressed, definitely.
Yeah.
But the other part of it was, you talk about a very typical consolidation strategy for an industry. So it was very fragmented, owned by a lot of mom and pops that did not know how to efficiently run the business. And so when you layer on a few things, one is just expertise on how to run the actual individual facility, or even we acquired a few portfolios, even the group of portfolios itself. One, you can operate those better, but then two, you layer on all of the G&A synergies that you have there.
Yeah. Were these medical practices? What was
it was all seniors housing.
Senior housing. Okay.
So everything from skilled nursing, assisted living, independent living, but then also it was very interesting because it was also horizontally integrated, where we had development companies, we had transportation, pharmacies, you name it.
Oh, interesting.
So it was across the board. Yep.
Good space to be in, right?
A lot of them out there.
Yeah.
So a lot of old people.
Yeah. Yeah. And the population is just aging, right? So, okay.
That's
So
right.
you then have what you called your quarter life crisis, or, you're a couple years in, you're a couple years in doing what it sounds like great work, getting promoted.
Yeah.
They're liking what you're doing. How's the pay at this family office? I know it's totally all over the board. Was it similar to your investment banking analyst stint or your CorpFin stint? I mean, I assume, well, let's go back to banking. Banking, you were doing about 140, whatever it is, 140,000, 150,000 all in. Was the jump to corporate finance manager, I assume there was a pay cut?
It was roughly the same, but
higher base,
more,
like 120 base or something.
Exactly. It was higher base, but roughly the same.
Yeah, and then jumping. So you're kind of like, you took a big jump from the back office up to banking. Then you got like more base to this other place, but you're still about the same. And then you jumped to family office. Do you mind sharing range? Like, it doesn't have to be exact, but like what the progression was around. Was it similar, like 130 to 150, and then?
Yep. It was a step up from the corporate finance role, but the same like structure.
But not huge. Not huge.
Exactly.
And there's no like carry because this is all family money, right?
Correct.
So, so are the bonuses pretty good there? I just like to ask because of the listeners like to listen like family office, so like it's all over the place. So
no, it really is. It really is all over the place. So the way that we were compensated, and it was a little bit different. It would range between like 20% to 30% of base.
Okay.
Basically.
Great. And so that was like when you started, you got promoted, and then the base salaries were, I see, jumping like 10 to 15K, 20K.
And sometimes more. I got promoted twice there. And the first one was a good bump. The second one was a very good bump.
Okay. Do you mind sharing what that was? Were you hitting 200 at base or no? 180 base?
No, I was getting close. Yeah, I was getting close. But what I liked about this place was that it was very much a meritocracy. And it kind of goes back to what I was talking about with the interviews is, you don't know how much you don't know until you find out very directly. And when I joined from the, corporate finance role, I thought I was this hotshot. I just led a restructuring, right? And then my buddy actually led me down the right path this time, because the level of analytical rigor that I was taught, but yet did not know how to do when I first started, it was very apparent to me and my boss, at the time. And so after that first year, I was getting up to speed, but not there yet. Once I hit that second year, I was really accelerating. And so that's why the bump was bigger.
Very cool. So why leave?
Yeah, that was.
You're in a good seat. Was there a chance to get promoted, or do you feel like it was kind of, you were going to be doing the same thing? Did you feel like there was like less deal flow? Why jump?
No, the deal flow was nonstop. And what was amazing is that we never had to go out and source. It was always inbound.
Wow.
Really impressive. No, I mean, the company itself was, like I said, amazing experience. I'm very, very fortunate to have had it because it was really the foundation of my real modeling skill set and ability to analyze companies. But yeah, no, left because of that quarter life crisis where it was, I'm 20, like 25, 26 at the time. And just thinking about, why am I not doing what I love and what I want to do? And the answer isn't an appropriate answer, which is that it's hard, right? It's hard to break into the buy side. It's hard to break into a hedge fund. And I don't buy that. And so the reason why I left was because I wanted to pursue exactly what my passions was. Because, whenever I would be working at the family office, it was good. I was happy, but there's a lot in private equity, which was, very much what we were doing, that is not investing related. I was combing through credit agreements. I was, putting together all like the actual like qualitative deal side of things, which is helpful. It's good to know, but not what I love, not what makes me happy. And so then I compare that to, off hours when I'm doing my own, public market analysis on companies for my own investing portfolio and how much happier I was then. To me, it was a no-brainer that I had to make a move and do it as fast as I could.
Very cool. So what did that culminate in? So were you looking for jobs? Were you interviewing for jobs in the hedge fund space, the buy side space, or asset man long only? Like, did you do like doing long shorts? What were you trading in the after hours? Tell me, like, what was this passion of yours?
Yeah. So some of it was naivete, right? But I
Yep.
was I was much more focused, I think, on the long only side. This really wasn't because I had never done shorting in my own experience. Didn't get a lot of the really big, sales and trading type of exposure from a bulge bracket. So was a little bit naive to that side of the business.
Yep.
Even though you follow the headlines, you hear about all of it. So I was thinking more long only. And so when I had left the firm, the family office, and I was just doing a lot of consulting based work, which was focused on valuation, on doing work like that for long only focused investors. That's kind of where I felt like my niche was and where I really specialized in.
So you left the firm without having anything lined up, just starting to do consultancy on the side, part-time work, just saying, hey, I need to figure out what I want to do here. You just left.
Yeah, and I had consulting gigs lined up.
But how did you have that conversation? They're like, where are you going? You're like, I'm just gonna do my own thing.
It was a difficult one. Yeah, it was a very difficult
They're
one.
like,
And
what are you
so,
doing?
yeah, and so I had a consulting gig lined up to help a friend build up his own private equity, fund. I had some other things lined up for valuation based work. And so when that was the answer, I got a very, very tough response from that. It wasn't, they were not
Like,
happy
okay,
about
and
it.
then what?
Yeah. Then the question was, then what? And so when then what was, I'm going to find a job at a public market shop. It was basically like a good luck out there. But I think you gotta bet on yourself a lot of the time because no one else is going to do it for you.
So tell me
And
how you did this. So you launched your own fund eventually, or how would we describe your capital management, founder experience, your 2 years of
yeah,
in
it
the
was it was
shark
a
infested water by yourself or whatever.
oh
Tell
my
me,
God,
tell me what
shark
it was
infest is the
like.
right way to put
Tell
it.
me because you hear this even from undergrads. You're like, I'm starting my own fund, or I'm going to do this. Tell me what it was like. What you went through.
Yeah. So I'll start by answering the direct question first. It was a research and evaluation based consulting
Okay,
firm, essentially. I wasn't
it
managing
wasn't a
outside
hedge fund. You are
capital.
managing money.
No. And so the reason for that is this, I was very fortunate to come up with a steep learning curve from not knowing anything when I joined the family office to actually being very aware of the space. And so you come to understand very quickly the probabilities of succeeding for emerging managers. And the reality is if you're not starting with call it 50, $100 million at least, especially in this day and age, the odds of you actually being able to sustain a fund is very small.
Yeah.
And that lifestyle is brutal. I mean, very, very brutal. So I knew that I was not ready to start a fund, especially with, how are you going to go out and fundraise? What's that story going to look like? How am I
Yeah.
getting money from an allocator? It's not going to happen, right? And so my goal, my plan was to build up some sort of, basis and experience and a portfolio of research and ideas that I've done and some of a track record, if you will, of those recommendations that would just easily translate over to a hedge fund space. And so that was kind of the idea behind what I was doing. I didn't see COVID coming, which was, lack of foresight. But yeah, no, I wasn't managing a fund, just my family and friends' money, which was great from the perspective of I didn't have that, pressure of real outside capital,
Yeah.
but also gave me the opportunity to develop that PM lens, because there's a big difference between the analyst and PM, and having that type of experience. So that gave me that experience I was fortunate to get. And so I started that. It was sometime in I think it was mid to late 2019. And I thought, I can do this for a little bit. I wanted to travel a little bit and get that bug out of the way. And then COVID hit. And so and around when COVID hit was when I had started really recruiting. I had a couple of calls and meetings with some very, I would say, big name hedge funds, some that got bigger names in the headlines because of things that happened, this year and last year.
GameStop. Yeah, go ahead.
Yeah. But anyways, I started that process in about February. And I remember I had a few things lined up in March that were supposed to happen, and March 13th rolls around. COVID was really starting to get bad and everything stopped. People just went off the grid. And so for, the next 9 months or so, I basically put everything on hold. And so I was very much just scrapping. And as you can imagine, if everyone's not hiring, getting consulting gigs was that much harder.
Yeah.
And so, my own workflow really died down.
And
so
you still had rent in New York to pay?
For a while, yeah. Yeah, that was fun. Yeah, my savings account was not was not flush after that.
Your rainy day fund was getting
That's
used.
right. It was gone.
So tell me a little bit about kind of how you progressed and how you started as things started opening up, kind of where you started interviewing. It looks like you started interviewing maybe at some startups and, FinTech. How did you end up at Titan? And just tell me a little bit about what you're doing now.
Yeah, so I put on the networking blitz, I would say, in June of 2020 or so.
Mm-hmm.
And really so my approach there, or it was a little bit later actually, sorry. June 2020 is when I really started getting involved on Twitter. And Twitter is actually a big part of my story.
Cool. Yeah, tell me. It's interesting.
Yeah, so I was never big into social media, not a big Instagram guy, Facebook, etc.
I'm going to pull you up right now while we're talking, but keep
Please
going.
Please do. I have a very good friend who now has almost 300,000 followers on Twitter. But at the time, tiny. And he recommended to me that I start just posting some of my ideas. I was doing all this work for, valuation, consulting, and research.
Mm-hmm.
Start posting ideas on Twitter, on FinTwit, and see what happens. Started doing that in the June timeframe, and all of a sudden just started developing a pretty sizable following, I would say. That then evolved into me starting a newsletter where I was expressing those same ideas, just longer form.
Yeah.
And, that all really, I would say, snowballed into now, I have, I think, 35,000 followers on Twitter,
Mm-hmm.
whatever it may be. And so, along this same, route of me wanting to go to the public markets, I was like, listen, I got to take my CFA if I'm going to be doing this too. And so my CFA got pushed back, obviously, from June 2020, got pushed back again to December, and pushed back again. I think I took it in February of this year, so past level 1. And as soon as level 1 was done, that's when I really just went all out on networking and whatnot. And so one of the biggest benefits of Twitter was my network that I was able to develop. I've met and been able to talk to so many amazing investors and hedge fund managers and people that I just really, really respect. I had alumni from my high school really help out. And so I probably spoke to not as many people as when I was trying to find banking. It was definitely a lesser number, but the quality of those interactions was significantly greater. And so I would say in February is when I started talking to some funds, nothing that was meaningful, just hey, if we are ready to hire, we'll contact you. Right. And so, if you're trying the same thing over and over again and not making any sort of headway, you're crazy for just continuing that same process. And so I wasn't applying to jobs on LinkedIn, or I wasn't applying jobs through any sort of mechanism like that, because my thought process there was like, I don't have a traditional 2 and 2 background, right? I have this crazy weird background. I was in banking at a boutique. I did some weird
Yeah.
corporate finance role, and then I was at some random family office. Like, who's going to just hire me like from a traditional shop? And my thought process was, well, like nobody. And so I was really just trying to network my way in. And then one day I was like, listen, it's not going to hurt if I just throw out some, applications here and there. So on Twitter, the very first day I'm trying to do this, I'm on Twitter, found a few hedge funds that were kind of hiring. And then Titan was a role that was just up there as an equity analyst. And so checked out the company, checked out the role description. I was like, this is exactly what I want to do,
Yeah.
and not even close. And so I sent an application, and, that very day, I was writing a thank you or just a follow-up email to the CIO. Like, hey, check out the company. I just applied, very interested, would love to have a conversation. While I'm typing up this note on LinkedIn, I get an email from him thinking it was just, this very generic, thanks for applying, we'll be in touch if, we think you're worthwhile.
Yeah.
Instead, it was, hey, saw you just applied. I've been following you on Twitter for quite some time now. Huge fan of your work. Would love to have a conversation. And so I'm like, holy crap, this whole Twitter thing actually paid off a
It
little
actually
bit,
worked.
right?
That's really
so,
cool.
so yeah, but that it definitely was nowhere near enough to get me the job. I went through they put me through a very rigorous interview process. I had a very large case study to do,
Mm-hmm.
and went through quite a long process with these guys, but was fortunate enough to make my way through, and eventually got the job at Titan.
It's awesome, man. So yeah, tell me a little bit about like your day to day there, how it's maybe similar or different from other kind of typical hedge fund jobs from what you know. And then, I'd love to hear kind of, well, first off, you can maybe tell people a little bit about what Titan does and the
Yeah.
whole
So
spiel.
I'll start with what Titan does. The very quick kind of description is that Titan is a hedge fund, but for retail. That's probably the best way to describe it. And the mission is really to, compound our generation's wealth. So many people don't know what to do with their money. And so instead of, putting it into GameStop or, YOLOing through Robinhood, it's, you can give it to professionals and have a great experience where you're investing money. You don't have to worry about it too much, but we're constantly communicating with you and trying to help you understand the investing side of things and the power of compounding. And so that's a very quick high level of what Titan is. Founded in 2018. We now have 3 different strategies, 2 of which we've launched in the past year, essentially. One is a large cap domestic book. You can think about your very high quality compounders, ServiceNow, Facebook, et cetera,
Mm-hmm.
Apple, Microsoft. Then we have a small mid cap book, which is we call opportunities, which is just like we say, it's we are looking for compounders as well, but we will be very opportunistic, looking for what we think is highly asymmetric risk reward opportunities.
Mm-hmm.
And then we have a international offshore fund, which is somewhat of a combination of the two, but I would say just more of the large cap domestic, but offshore. We also just recently launched a Bitcoin strategy, which has been doing incredibly well. And so that's what Titan is now. We have an application, everything. It's mostly a mobile-based product. But my I guess day to day is we have a team of 4 equity analysts, and then we have our crypto analyst / PM, and we have our CIO, who's also the co-CEO of the company. And so the way we've broken up the coverage universe is mostly by industry group, if you will, or type. So I cover a lot of the software names, semiconductors,
Mm-hmm.
but also anything more broadly TMT. It can be an internet name, consumer, et cetera. But we have an analyst that really specializes in those 2. We're generalists at heart. We can cover any sort of name, any industry.
Are you allowed to share how many assets under management you guys have or anything like that? Or
I'm
no?
not sure if I can. I'm not sure if I can share that.
That's fine. That's fine. And can you tell me approximately like how big the team is? What's the prospects? You guys have, I think you have funding, right?
Yeah.
Yeah.
Yep.
So tell me a little bit
Yep.
about that. I mean, I think that's public information, but yeah.
Yep. We just raised our Series B, led by Andreessen Horowitz.
Mm-hmm.
That was it was right after I joined, so around July timeframe.
Mm-hmm.
So well funded, and the way that the entire team is structured. So the investment management team is the CIO, and then we have the 4 of us analysts.
Yep.
and the Bitcoin analyst as well. So that's 5, I guess, total.
Yep.
Then we have IR. We've just hired someone to really run like data analytics, really around like our factor exposures and things like that, attribution analysis, if you will. We have investor relations. We have really a broad group there on the core investment management team, but we also have a content team who does a lot of editorial, sending out comms to clients all the time,
Yep.
focusing on social media, et cetera. We have a massive engineering team who's really doing all like the back end work of the product and whatnot. So very a wide range and client experience, et cetera. So very wide ranging company that's grown from, I think it was 8 people last year to now 45 or so.
Wow.
So growing very quickly. And so, yeah, the core investment management team though is very small and tight knit.
Yeah.
But I think it's appropriate because our equity strategies, we run a relatively concentrated portfolios, 15 to 25 names each. And so I would say that my core coverage is about 15 names of names that we own. And so the way that it's worked, up until now, and we're heading into my second earnings with the company, is that it's been a lot of time spent ramping on our names and really making sure that we understand the 80-20, right? This Pareto principle, what's the core argument, what's the bull and bear thesis, what's our risk here, et cetera, et cetera. And then, my other time is spent generating ideas and doing pitching. And, a lot of the time too, I'm talking to friends that have, gotten at hedge funds, talking to see what they're seeing, what opportunities they're looking at, things like that, And so I would say it's nothing that's any different from any other hedge fund analyst that's at a long only. We can do a lot of hedging and whatnot, but it's not like a pod where we're very active and nimble. We're trying to be more long-term oriented, but we will still, we'll trim names or here and there if we think the risk is just not in our favor heading into earnings. We'll add names if we think that there's highly
I was trimming Facebook. I've been doing my little victory lap around trimming Facebook before they crash because I could see all the e-commerce. I'm in the e-commerce communities. I could see them all freaking out from the Apple thing. Like, I can't track anything. I'm like, oh,
I can't track anything, right? Yeah, no.
What am I spending my money on? And same with us. Like we spent on Facebook and AdWords, and like ad budgets were shifting to Google. So it took
it's really interesting. Everyone was giving Facebook a hard time over the past couple of quarters for talking about the IDFA headwinds, but everyone else was like, it'll be fine. And then now everyone's like, it's not fine.
Not fine. I think there's a reason they were taking out full page ads trying to fight it or whatever.
Yeah. And, I can't really comment on the space too much, but there are definitely going to be some beneficiaries of this that are not specifically performance-based, marketing advertisers. So
interesting.
It's very interesting. Yep.
And maybe offline we can talk because I help manage a portfolio as well for some of our subscribers too. So that's interesting. Yep. Not actually managing a portfolio, but like almost like they can track it.
Got it.
Yeah. But anyways, this is really, really interesting. I'd love for you, any other, like just looking back at your career, any other final words of wisdom before calling it?
Yeah, I would say the biggest thing first and foremost, it's so easy. It's much easier said than done. But the biggest lesson that I learned is if you know what you want to do, just go after it and don't take no for an answer until you get there. And the application to me, and of course hindsight's 2020, but instead of taking that city job, knowing what I wanted to do, just waiting and holding out until I got what I wanted. That's probably the biggest thing. Know what you want, create a plan to get there, work backwards if you have to, but just never take no for an answer and just go after it.
I mean, I think it's tough because like in your case, like that's, you mentioned senior year, you were pretty busy. So it's not like you had necessarily the option to do that. So it's kind of like, yes, but sometimes even if it's delayed or late, you can still make your way there.
Yeah, no, I definitely think so. And I think that, listen, you have to have priorities in life. And so, yes, I was busy, but would it have been a higher priority getting to like a bulge bracket bank? Probably, and so,
back, you're like all the pain it caused you.
Yeah, no, exactly. But what I would say is that everything happens for a reason. Everyone has their own path, embrace that, and, make every opportunity a learning opportunity because that compounds over time.
Love it. We'll end on that. Thanks so much, Chris.
Awesome. Thanks, Pat. Appreciate it.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.